The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Thursday, the 14th of August, halfway through the month, just about. We're looking at the Dow coming back from a sharp slide. When you think about normalcy, at other times with that kind of report, with that sudden bump in inflation, the market would have been down huge and stayed down huge. And here we are, at least trying to come back nicely. Look at this. The Dow is in a leg C. It had a low this morning. This is the print. This is not, this is after some kind of a rebound from the 830 smash. Let me just show you the YM. For the moment, the YM is the futures. Look at that. It had quite a pullback. It had a high yesterday, and then today the futures just missed making a new high by fraction, slid down from the 45,063 level to 44,798. And now it is trading down 86 at 44,938. Not bad. Let's go to the cash. So you want to look at the cash because the cash is the trading hours 9:30 and 4, and we're only down 78 at 44,844. Really looking very much like it wants to test the 45,016 high of the 23rd of July. The all-time high is up at the 45,073 level that was made back in November, December of 2024. I do want to go to the S&P because this is a slightly different pattern in that it had already made an all-time high Monday, Tuesday, Wednesday. On Tuesday, Wednesday went even higher, and I've got this as an alternate count, but it's really very strong. The potential for the rectangle arch formation is now a lot less. In fact, I'm taking it away because it's broken out and it's closed above the left side high of 6427.02. This is really good. I have an extension that goes to the 6622 area. Let's just go one step at a time. At this particular point, if there is another high in the next day or two, in other words, if we get above this little doji candle high of yesterday and go to 6480.29, 1 penny higher, that to me says that that's stochastic at 90% and starting to flatten out is a really good sign. And that speaks to the bull phase that we're in right now, that buying begets buying and dips are treated as entry points, new entry points. But here's what I'm really looking at. Should I do that now? I'll do it now because I'm thinking about GE. Really a benchmark for this market. GE Aerospace trading up 249 today at 271.28. Really tanked. It was down 14 points after making an all-time high at 281.04 yesterday. So is this a buying opportunity in GE? I'm looking at this and I'm saying, well, it is kind of overextended. The technicals are pretty weak, other than the 9-period moving average being quite strong. So I'm just giving it another day or two. Normally, we are still long from the 197 area. Do you want to add right now and just give it that last little bit? Because if it breaks from this, if it makes a peak today at this alternate count G, if it goes above 281.04, if it goes by 1 penny to 281.05, basically that's really restarted. This could then become a leg C. That would be very positive. And if you're looking at Hood, which kind of is for me the benchmark of the public's entry and participation in the market, it went to 117.70 3 sessions ago, and it took quite a dive yesterday. It's one of the biggest red candles it's had in a long time. In fact, in a very long time. Point-wise, it's probably one of the biggest it's had. And now the 9-period moving average is okay, and it's trying to rally. Is this a great time to enter just for a quick trade up to maybe the 100? Remember, my expression has always been for decades that stocks that go to the 96 area invariably quite quickly go to 105 to 106, somewhere in that mid 100, lower 100 area. But then it takes a period of time, and then the next target I have, this is like back of my mind when I'm always thinking when I see stocks at that was a particular level, 124 becomes the next one, but it takes a little while. Well, darn it, it went to 117.70. That's an eye blink away from that 124. But here is where you're getting this kind of double top with the technical starting to weaken. The 9-period moving average is still strong. It's in a leg C in the weekly chart. Let's go to Microsoft. And all three of these we actually own. So 522.25 up $1.67. It's kind of stalled since that 555. Hold it, Steve. Gosh, that sneeze. 555.45 was the high, the all-time high that was made beginning of August. In fact, what date was it? That was the end of July. I better put that in because I keep talking about it and I keep forgetting. 7/21/25. Okay, so that's that. And I'm not making it red just yet because that 9-period moving average is still strong and the price has not closed underneath the 14-period moving average at all. In fact, it hasn't gone under the 14-period moving average. This is amazing. What a nice technique, huh? Since April the 23rd, because at 373, the very next day, it crossed positive and has been positive ever since. So watching this very closely. So that was the S&P. The QQQ made an all-time high yesterday. It's pulled back a little bit. It's down 83 cents at 579.50. I don't think we're out of the woods here. I think this is kind of a shaky moment, and I mentioned in my webinar that I am anticipating, I mentioned in the show as well, that there's just going to be some shakeup. There's too much consensus about low rates. And that always is it makes me a little nervous when that happens. And you can expect, well, we got it. I didn't expect it today. I thought it was maybe in a week or two, but we suddenly got it today. So this is something to take in. I would not dismiss this lightly and just say, bull market, we keep going higher. We'll see what happens here. So the QQQ is still very strong technically. All the technicals are very strong. If you go to the IWM, this is the Russell 2000, down 3.37 underneath the gap up low of yesterday at 227.84. This is going to be very interesting. Why? Because there's no other way I can count it. Using Chapman wave methodology, let me just show you something here. Go to it right there. It is. Okay. In the Chapman wave methodology, you try to identify the lowest low bar and count each successively higher peak. The idea is to get you from a buy signal to a buy mode, and that should take you to at least a D. At D, other things can happen, but that's the target of the buy mode. After that, it's kind of a bonus because it could recycle, do a bunch of things. It could even go to E, F, and G. But once you're in a buy mode and you go to C, there's E, F, and G, but there's never an H. So when you get to G and you go above that, you have to consider that something else has happened. You have to do a count or recount, or you have to reanalyze. Well, reanalyzing, this is a 212 low back. That was the beginning of August, end of July, and this is a leg C. There's no other way I can count it. I'll be right back. Dow's up. Dow's down 91. S&P's down 10. Basil, Chapman, Tiger Conditions. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back. So we're looking at the XLK, which is the Select Tech Fund. Also went to, I've got it as a peak C right now. It's down 39 cents at 267.92, having made an all-time high yesterday, and now it's in a leg C in the weekly chart. Are we going to be looking for Ds and then we get the big pullback, some at least decent digestive phase instead of just one-offs? I don't know. So I just wanted to go to the SMHs, which is very important. The semiconductors made an all-time high yesterday. I've got that as a peak C. And if it goes 1 penny above yesterday's high of 302.98, goes to 0.99 or 98 or 99 today, that continues. But if it doesn't make sense, that'll go to the D, but it's only a leg C in the weekly chart. Remember, we're looking for Ds in those weekly charts, at least Ds to make some decision. Now, this is going to be so important because within the context of everything we're looking at, look at the TLT. The TLT is just stuck in a range, right? Look at this. It's gone to a lowercase h that goes to a lowercase m. Let's just draw it in here because we want to definitely see it spike much higher at some point. So there's one arch. There's a potential another arch. And if you look at the monthly chart, it's just going nowhere. But if you look at the TBT, that is the inverse. This is the yields themselves, 3.55, 35.55 at this particular moment. The weight of evidence looks like it wants to be going down, but we haven't got proof. We get proof if it can go to 34 at any point. If it can tag 34 to 35.55 right now, that'll be really important. And if you're looking at stocks like a Toll Brothers, look at this. Toll Brothers down today 3.14 at 130.22. This is you can call it peak A, peak B, peak C, and maybe a leg D right now, right here, D. That's in the daily. Leg E in the weekly chart. Nail, we were looking at the other day, had a huge move to the upside and pulled back quite sharply today, down 550 at 79.51. I've called this a leg E in the daily, leg E in the weekly. So we're kind of ready for some kind of at least a bit of a breather in these interest rate related stocks like the home builders, like Nail, which is the DX home builders, and suppliers 3 times long, the XHB, which is the 1-to-1, same thing, except it's a leg D in the daily, maybe a peak D today. So with that said, I wanted to go to high-grade copper. High-grade copper is down 0.03. It had a bit of a rally. It's pulling back somewhat here. I wanted to look at platinum. Platinum has pulled back very sharply from that peak G in the 1500s. It's down to 1359. It's just kind of pulled back. It's not doing very much. I want to look at wheat, dust wheat. Dust wheat is at a low, at a multi-year low right now at 502. If you're looking at soybean, now this is interesting. Look at this chart. That was a nice spike to the upside. A leg E right to the 200 period moving average. It's pulled back a little bit today, down 1,034.5. This is a little different because the wheat and the corn are looking very poor. Look at corn. Again, same thing, almost a multi-year. I have this going to September, October, to retest the low of right here that I drawn in this particular low. It isn't the low, it's just a low that was made April of 2021. And the price gets smoothed out, but that was the low. The price here is 330.25, but we're at 372, so you've got a bit of a way to go, and that would be until September, October. I have it until October with a Chapman wave inside wedge, dashed red, target support line. Okay, got to watch that very closely. And let's move that away now. And we want to go to, okay, so a question came in. I did everything. I think I did everything. Yes, crude oil. Just crude oil right now is trading up 82 cents. Nothing too much to see. So a question about Eli Lilly. LLY is the symbol. Eli Lilly's trading at 667.04, up 6.55. So this particular pattern where it gaps down huge and then takes out the gap bar low, and only 3 bars later does it close above that low. This is a turnaround. I have to look at the volume. This is not one of those Chapman wave volume price climactic low reversals, but it is a bit of a reversal. All I can say is the history so far has been to make lower lows and lower highs. Then it has this huge gap, and it hasn't taken out. If at any point in the now I don't know whether you're short or you're long. I'm just going to treat it as if, what would I do now? I'd be looking at the candle high of the gap down day that was on the 7th of August, and the high is 678.29, and it's trading right now at 66 to go. But if it's able to close above that, it says it's trying to treat this particular down spike as a support level. The way I'm looking at it, there's a greater chance that if we take out yesterday's low, and that was the low of 644.50, closer below it, this is just stuck in the lower range. If you were short, I'd stay short, but I definitely would take a little bit off to kind of reward yourself if you've been short all this time. If you're looking to go long, it's almost the same thing on the upside. Now, if you're going to go long, I would look today's low is 655.10. I would just say it's trading at 667. So that's already 12 points. Oh, wow. 655. That's a nice move. All right. All I can say is if it takes out today's low of 655.10 between today and tomorrow without first hitting 667.74 is the high. 669, if it goes to 669, I don't think it's going to take out today's low. But for whatever reason, if it takes out today's low, I'd just be real careful if I was long. And I wouldn't be aggressively long. I'd just say, look, there is a turnaround. The stochastic's still very weak. But if this turnaround holds, then what I'd be looking at is I'd be looking at this particular high of the gap sharp pullback of 678.29. Closing above that is a good sign. Not great, but a good sign. So I hope that helps you. But the monthly chart, lower lows and lower highs. So the theme is a sell mode in the monthly chart. Weekly chart, lower lows and lower highs. It's got 6 No, 599. Let's call it 600 as the 200-period exponential moving average. And that, to me, looks like a target at some point over the next 2 months. But in the meantime, it could have a bounce. All right, next question came in. Where did it go? GDX. So GDX made this little double top in the 58s. It's now at 58.02, down 6 cents. All the technicals are very good. The weekly chart has this Chapman Wave Insight Track repellent zone, and so far it is a repellent zone. It's been a fabulous move to get to that level, to touch the green line, which is the upper part of this inside little mini track to the upside channel, and we'll just watch it closely. All I can say is that if the GDX actually in the next week tags 57.08, which is the 9-period exponential moving average, that's going to be a test of whether or not it takes out the lower 4 sessions ago, which was that very sharp 70 or 80 point move down in gold, and that was at 56.34. This is the gold miners vectors. Right now, it's just in a sideways move, digesting huge gains. That's the way I'm looking at it. I'll look at silver as we're going to the break. Silver is down 51 cents. It's also in a trading band right now. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So remember Chapman Wave methodology? I spent a little time on this in the webinar to show the takeoff. So this went to peak A, peak B, peak C, and peak D in the diagram that I have, and then it goes dashed line E, F, and G, and it shows a much sharper pullback at D as possible. But at the same time, D is the objective in the buy mode, and look what happened. The 1 minute chart went to a peak D in the peak D, pulled back to the 200 period moving average for the third time, and then took off again. It went to a peak D in the 5 minute chart. This is the E-mini, and it's in a leg B in the 10 minute. Is it even possible that we can get back everything that we lost over here? Well, we've just broken to another recovery high, and that starts at leg E in the weekly chart, and it's almost like an instant restart, and leg B has continued. And I drew the rectangle because I've done webinars. For those of you who have signed up and you want to listen to my webinar, you'll become subscribers, you'll get my daily newsletter, etc. We've got a little bit of aggressive today. We're going to see if that's going to work out based on Chapman methodology. I'm not sure it is, but everything said that there was a good chance that if we did it appropriately, it could work. But in the meantime, let me show you this. This rectangle is a large rectangle, which says if you go down sharply and then you start to make higher highs and higher lows in a stair-step fashion, you can go to a peak A, then a B, and a C, and even a D, and that could go to just under, right on, or just above the previous high. And then you've got to be careful, because if it pulls back halfway into the rectangle, that could determine a very sharp pullback, almost back to the lows. So here we are. We're actually in leg E, underneath the high that was made at that peak E in the 5 minute chart at 8:35. We took a dive, and 6491.75 is that number, and we've just hit 6488.30. 25. So we'll see if that's going to be able to hold, and it is only a leg B. Are we going to, is this a 2-click session? That would be amazing. I can't believe. Can it really be, with all that bad news out there with the inflation? But in the meantime, back at the ranch, that's going to be what we're looking at. At this point, everything's holding very, very nicely. All right, I just wanted to go through live the action, and what it would say is that if this continues to hold, then we should tag the high that was made at 6491.75, and if at any point during the day there's a push about 2 or 3 points higher than that, that creates a really good support of this 200 period moving average in the 5 minute chart of 6480. But everything is a work in progress. Let's just see. I'm just telling you as it's unfolding what we're looking at. Most importantly, silver, as I say, weekly chart still looks very good at a peak C. Monthly chart went to an E, and the daily chart is kind of stuck. It really needs to get to 39.10 within the next day or two without taking out 37.50 in silver. I want you to go to, I did that. And then the question came up. Yeah, okay. So let me do this. I had a couple of questions left over from late yesterday. Home Depot. So, Basil, you were talking about Home Depot and Sherwin-Williams. If they pull back at all, where would you see a support level? Well, Home Depot is trading at 402.52, down 4, just over 4.5. Hasn't taken out yesterday's low. This is a leg D, a possible peak D today, and only a C in the weekly chart. So if you are long, what I would say is, on some of your position, if you've been long for a while, somewhere into the gap, I would say 398. If it hits 398, I would definitely take a little bit off. Would I add there? Just in this particular phase, I'd say that if you're feeling that you've really done very well and you were surprised at this particular move, if it does pull back to 398, just reward yourself by saying, I'm taking a little bit of, I can always put it back on, but it's just kind of part of money management because we have got to a D. The other thing was Sherwin-Williams, SHW. That spiraled up to a leg B. That actually looks like a brand new buy signal to buy mode because the stochastic's flat at 92%. Leg C in the weekly chart over the Chapman Wave inside track repellent zone. Now it's a propellant zone, and the monthly chart is improving. It's the 9 and is way over the 14, but the other technicals are weak. So that's improving some. So 366.95 down $1.88 for Sherwin-Williams daily chart. I'm going to say all the technicals are good. If you aren't in it, I would start just a small position right here at 366.95 and a 1.5% risk. I don't think that's a big deal. 1.5%. Why? Because if it holds and it makes a lower low to a lower high tomorrow, that makes a peak B, and Monday starts a leg C. You've got yourself still the B's. We haven't made a peak B yet. You've got a leg C to come and a leg D. So just and I don't get carried away. Just start a small position, and if it takes out by Friday, by tomorrow, if it takes out today's high, which is 371.76, then you can add a trading position to the very short-term new position you're putting on, and keep this as a core. That's the only way I would do it, and that gives you the opportunity to benefit from the upside, because this has broken all the resistance levels. So here's the resistance level of January, the week of the 31st, round number 370 high before it came tumbling down to the 310-ish area. Then it ran all the way to a slightly lower high of 365.57, then came down to a higher low, and now it's broken out into leg C. So that just says you start to make higher highs and higher lows, but the technicals are not that great yet. But the 9-period moving average, we've got 2 days to go. Today and tomorrow, the 9-period moving average in the weekly chart has crossed positive. So that's what I'm saying. It's at least you could use this as the potential for a move to the upside. Okay, next question. IWM testing and rejecting the gap next day, bullish setup. IWM. So so I don't like the fact that it took out the low of yesterday's huge gap up. You can understand that if there's this kind of weakness, that would be an appropriate thing to do. I would have preferred if it didn't. And what I'm going to say is that the IWM at 228.19 down 3.04, it needs very much to get into the a third of this candle from yesterday. Doesn't have to. I would like to see today that it tags 230.25. It just actually starts getting back into the 230s. That would be really nice action. Good action would be if by the end of the day, all the selling has been ameliorated by buying, and we start in most of the indices and key stocks to start making higher highs going into 3 o'clock, and then we might see a burst of strength. But that's just... there's a lot to happen before that can really unfold. I'll be back in a moment. Dow is down 85, S&P is down 1. Not bad.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back, and a couple of questions. One is, could you show some of those screamers that you've mentioned before? Those are stocks under 10. You don't have to do anything other than give the chart formations. So, all right, let me show you. Here's NPKI. NPKI. I haven't looked at it for today. NPKI. NPKI. There it is. Okay. NPKI. This is composite, recyclable composite matting products. So these are stocks that are on my list that I wanted to go long, different ones, but I haven't because we were in other positions. Look, this has gone to a leg E in the daily chart, leg C, only a C in the weekly chart. This is composite, recyclable composite matting products, and it's gone to a high right here in the monthly chart. So this is looking really good. It's trading at 993. The support will be at 962. And if it takes out 1020 in the next day or so, that's going to be really positive. And that's NPKI, NPK International. Next one is Octa. Oh no, this is not under the. RYAM, RYAM. This is in a leg B. I've been mentioning this before. It's Rayonier Advanced Materials, Inc., product and supply, high purity cellulose with liquid crystal displays, food and pharma. Horrible monthly chart, up and down and up and down. But the weekly chart is really improved. This is a brand new leg A. It's only a gray A, but this is a blue B. In other words, this is in a buy mode at $5 down to 5 cents today. Leg B and the 200-period moving average of 526 would be a target. 468. What is that low? 475. I'd make 468. Very near-term support that needs to hold. Let me give you some others. JELD. I've also got a slew of biotechs. Whoa, look at that. So this is an alternate count. That's because you never get an H, so that has to be a C and a D. It's in a leg D right now. Just having gone over 6, it's down 24 cents at 576. It's in a leg C in the weekly chart. Horrible monthly chart. JELD, WEN, holding. Oh, I forgot to put down what it is. This, I think, is in, I'll do it right now. JELD dash when does, and what do they do? Newton. Let me just see what's going on here. Gelled windows and doors. Is that, well, if it's windows and doors, I don't know if that's correct. Maybe holding. Let me just type in holding. I didn't put that in. Maybe that makes a difference. Holding. Now I can go. Designs, manufactures, distributes interior and exterior doors, windows, and related building products. Well, this is in the building area. So it had a horrible arch formation, took out the left side low at about 9.80 or something, plunges down to, what is it, $3.27 on the May the 23rd, week of the 23rd, and now it's up quite nicely. Yeah, this is improving. Let me just show you. This should be a G/C. Is that correct? A, B, yep. G/C. Right there. Got it? Right there. That goes to D and F. D, uppercase, D, and E. Don't rush. D and E. Is this a brand new, like the others, spike to an A and a B? It could be, but anyway, the notation here is not as important as the 9-period moving average sharply over the 14. The price is sharply over the 9. The MACD is good. Relative strength is good, not great, but good. The stochastic 74%. I like to see 80%. And the MACD, the on-balance volume is very good. So here's one. JELD is the symbol, doing very nicely. Okay, I could do others. I just wanted to show you something real quickly. I just want to see if this is unfolding the way I'd spoken about it. Yeah, so this is an... I didn't put it in because I was busy talking at the same time. We have now taken out the gap. This is a bull market. We've taken out the gap. Let me get there. Yes, this is A, brand new B, and a leg C in the 1-minute chart. Think of this as a daily. The weekly chart is gone. It could have recycled. I actually put that in. You can't see it because it's underneath the other coloration. There it is. This is. I don't need it anymore because it's done. This is leg E. Could be an instant restart. We've gone way, but this is a high of the day, isn't it? Let me just check. Today, right? Today is. Yeah, today. This is the high of the day. We're right at the high of the day. What a market we've got. We're going to still see if the aggressiveness that I had this morning is going to pay off. Let's go. Yeah, this is only a leg B. And if this is a 2-click session, then you can just hold this until it goes to a D in the 10-minute chart. And that's my recommendation right now is don't trade it. Hold it until maybe 3:30, unless there's a very sharp pullback. But right now, there's only a leg B in the 10-minute chart. I needed to go to, I did that. Okay, question came in about, FXI, I forgot, sorry, FXI. I'm not going to go here. I'm going to go to it in the charts, daily, weekly, monthly. FXI. Oh, look at that. Very nice. Pop to the, look at that. Spiked yesterday, goes to peak. A, B, C. There are so many C's. It's just amazing. A, uppercase, A, B, C, right at, just under the previous high, but it is a buy signal to buy mode because of the 9-period moving average flip positive again. It is pulling back today 60 cents at 38.49. That's probably because of our inflationary news. Hasn't gone to a peak C in the D in the weekly chart. Yeah, this is doing very nice. FXI, the iShares China Large Cap ETF, very nice. The target that I've had for a long time now is 39.78. That was made back in 2022. I'm still having that as a target, 39.78. The high that was made over the last 3 weeks has been 39.13, 39.14, and yesterday's high was 39.09. I'm anticipating that there will be a pop to the upside. Queb is, this is the internet, this is Chinese internet, made a new recovery high, leg D in the weekly chart. Now remember, there was a peak C, and then a pullback sharply. It did flip to pink, but then it's a brand new gray A, gray B, gray C, and now you've got D. This D surpasses that C. So you've got to a D, even though it's lower. If it turns down from here, it doesn't matter. It's a D. It can keep going higher. I'm just saying that's how, in the Chapman methodology, that's the formula that we use, and that's the way you can see it right now being played out. I do want to go to, did that. Good grief. Oh, RS, RH. RH, this is the old, RH, this is the former Restoration Hardware. Peak A, B, C, a leg D right at the 200 period moving average. It's done very nicely on the daily chart. Weekly chart says, oh, well, what's new? It was once upon a time in the 450s. It dropped to the hundreds, and now it is at 231.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So the question came in of ETH, Grayscale, Ethereum. This is doing very well. It's pulling back a little bit today, down 53 cents at 44.15. This is a leg C in the weekly chart. I'm looking at this to say the technicals are very strong. The price has had the kind of extension that says when it does have a digestive phase, it could be quite whippy. And so really what you have to look for now is not what's happening on the upside. Where's the support? And the support now is at 40. It's at 44 right now. 40 to 38 are the 9 and 14 period moving averages. We haven't even thought about getting there just yet, but any day in the next, I'd say going through Tuesday, if it closes under 41.22, let's make it 41. Then you've got to start looking at the support levels. But right now, it's still very strong. ETHE is the the other vehicle, and that also is holding nicely. It's down 48 to 38.67. Very strong leg C. And there, the 35 to 33 is key support. So let me just sum this up before I hand you over to Steve Rhodes. Should be a wonderful show as always with Steve. We've got the Dow right now down 65, having come back very nicely. Now, this is the leg C. Let's just say it makes a peak C today. It could get to leg D under the previous high and then pull back. We're going to watch this very closely. So the technical see the MACD finally turned positive. And what I said is when the MACD turns positive together with the 9-period moving average for the Dow, that's really like a new trigger for upside momentum. But it has to hold. In the S&P, you've already got all that. You didn't have any negative in that sense. Look, the 9-period moving average acted like a spring when the price pulled back sharply under the 14-period moving average, and the 9 held like a rock. It stayed green, and now you've got a very strong move up. The 6,500 area, that's going to be, I think, quite a bit of resistance in the short term, but most importantly, 6,400 has to be key support over the next day, next couple of days. Have a wonderful day. Check out my Opening Call Daily newsletter, and I will see you tomorrow. Stay tuned for Steve and all the great program.